let's continue with what we did yesterday. We're still on Douglas activity. So let's see how we'll be able to answer question 3. It says paid rent for 1 month. So let's first identify the accounts involved. Paid rent for 1 month. So paid rent. So if we pay, means we paid with cash. Paid and rent. So let's first draw the T account for rent. Let's draw the account for rent. What is rent? The business paid rent. So we can say rent is an expense. Rent is an expense. And now, as I said, the left side of the T account is called debit. Is the debit side. The left side is the debit side. So this side is the debit side. And the right side is the credit side. The right side of the T account. This side is called credit. Credit side is the credit side of the T account. So credit. So let's state the rules regarding rent. Per the accounting rule, rent, which per the accounting rule, expense increases at the debit side and decreases at the credit side. So the question said paid rent for 1 month. So it means our expense increased. Our rent expense increased. So per the accounting rules, expense increases at the debit side. So we record it at the left side of the T account, which is the debit. So we record it here. We record it at the left side, which is we record the 500. It's increased because we paid for it, and we paid. What did we use to pay? Cash. We use cash. So cash. So it affects 2 accounts, rent and cash. So we now need to make the entry for cash. I think I have cash somewhere here. So we use cash. The business use cash to pay for the rent. So our cash will decrease. And per the accounting rules, we said assets decreases at the credit side. Asset decreases at the credit side. So we had cash. We've paid for the rent, so our cash has decreased. The cash we now have as a business has decreased. And we said cash decreases at the credit side. So cash will decrease here. This is the credit side. Cash will decrease at the right side of the T account, which is the credit side. And why did cash decrease? It's because we paid rent with it. So it decreased in the name of rent. So we credit the cash account in the name of rent. Rent, it decreased by 500. So we are now done with question 3. Yeah. Now let's look at question 4. Paid electricity for 1 month. This is similar to what we did in question 3. So paid electricity. We know we paid with cash. So cash. And electricity. It's an expense. So we've identified the accounts that this transaction affects. So now let's open the T account for the 2 accounts we've been able to identify. So electricity. This is the electricity account. And we already know that the left side of the T account, is debit. So the left side of the T account, so this is the debit side. And the right side of the T account is credit. So this is the credit side. So debit side, and this is the credit side. So it says paid electricity for 1 month. Electricity is an expense. Expense are cost to the business. So let's state the accounting rules regarding expense. We said expense increases at the debit side and decreases at the credit side. And the question says paid electricity for 1 month, $200. So the expenses of the business has increased. That's electricity. The electricity expense has increased for them, has increased. So per the accounting rules, we said expense increases at the debit side. So as we already know that the left side of the T account is the debit. And we said expenses, when expenses increases, we debit it. So now let's debit it. Let's debit it with 200 in the name of cash. It's increased because we paid for it. We paid with cash. And now since it has been debited, as we said, when you debit one account, you credit the other one. So since we have debited the electricity account, we will credit the cash account. So we will credit. Someone will ask me why are we crediting the cash account? Now our cash, since we paid for electricity, the cash that the business had will decrease. Assuming we had $1,000 and we've paid rent of $500. Our 1,000 now decreases to 500. So it means, and we said per the accounting rules, we said assets decreases at the credit side. So we are going to credit the asset because it has decreased, and it decreased by 200. So 200 in the name of electricity. So we debited electricity and we will credit cash. So assuming you don't even know, assuming you are able to identify the accounts involved, if you debit one, you know you have to credit the other one. So even if you don't remember the rules, when you remember one rule, you know if you debited it, you have to credit it. So you do the opposite for the other one. Now let's look at example 5. Example 5. Purchased car for cash 1,000. So the business purchased car for cash. So now let's try and identify the accounts involved. Purchase car for cash. So it means we use the business bought car and they paid by cash. So we know the cash account is 1. And now someone will say, what is between the purchases and the car? But we will use the car because it's specific. It's telling us we purchased car. So 2, this is the second account. So now let's open the T account for car. So is car a liability, asset, or what? As I said, asset, it's in simple words, asset is something that belongs to you. You know, it's something that's more or less like a property or something that belongs to you. And the business has bought a car. So now the car belongs to the business. So it's the business property, you know, it belongs to the business. So it's now it's an asset. So we know the left side of the T account is the debit side, and the right side of the T account is the credit side. So let's state the accounting rules regarding assets. We said assets increases at the debit side and decreases at the credit side. So since our asset has increased, we've bought a car. Initially we had 0 car, now we've added and we've bought a car. So our assets, the properties that we have, the number of cars or the cars that we have has increased. So, and it's an asset, and asset increases at the debit side. So we will debit the car account by 1,000. In the name of cash, we use cash to buy the car. We used cash to buy the car. So what happens to cash? The effect, what happens to cash? The cash that we have will decrease because we've taken money from our cash account, and we've used that money to buy a car. So our money in cash, that's the effect. The money that we have at our disposal will decrease. So let's go and look for the cash account. So we have the cash account, and we said per the accounting rule, assets decreases at the credit side, and cash is an asset, so cash will decrease at the credit side. So we will credit the cash account by 1,000 in the name of car. So I believe now you do understand the dual effect, you do understand the rules regarding asset liability expense. If you do have any issues, just let me know and I will be happy to clarify it. This is all for now. We will continue tomorrow as well. Bye bye.